Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, the last question we were asking Sandeepa was about the cost of money and the fact that it is rising in India. That's an opportune moment to get someone who can speak on this and a whole host of NBFC issues with unmatched mastery. Sanjiv Bajaj is our guest. Bajaj Finserv is going to follow in the steps of Bajaj Finance and get included in the Nifty as well. That will be the second stock from Sanjiv Bajaj that is entering the Nifty. Sanjiv, that's a great backdrop to invite you. Thank you very much for joining us today. Well, let me start where we left off with the previous guest, the cost of money. Is that a bother, or do you think from your point of view you can pass it on, but it may create trouble in the NBFC sector?
Morning, Lata. I think this is a developing issue that one has to really watch out for closely. And as we are really building our budgets for next year, we are starting to build some expectation of a hike in interest rates. We're still not very clear how much we should plan for. And there are two different issues. One is we can see where the 10-year has gone. Clearly, it is providing a direction. Maybe partly it's also pointing out to the current state of affairs and what has happened in the last few weeks with PNB and others. But we do know inflation is inching up as well. It will be important to see where the RBI comes out with this in the next round of policy decisions. But yes, I see things going northwards right now. How much of it we can pass on, this will depend business by business. It's also competitive. It also depends hence on what happens with our competitors in each of our lines.
Okay. Sanjeev, good morning. I could be nitpicking here, but in insurance business, we have seen momentum slowing down a bit. And a large part of earnings being driven by the Bajaj Finance business now. Is that a bit of a concern?
Anuj, if we really break up earnings for Bajaj Finserv, Bajaj Finance continues to be on a strong growth. We have seen a record year for the Bajaj Allianz general insurance as well, so let's not forget that. The life insurance is where we have seen lower profits last few quarters compared to previous years. And if you remember of the life insurance business, the faster you grow on new business premium, the greater is the first year strain, which actually means that as the business starts growing for the first few years, you don't write much profit in that year because our accounting rules require us to take all the expenses up front. The profit only comes in later years. So in a funny way, if you are going to be building that business up, and as you know, you can see the last 18, but it will impact profits in the next couple of years before they hopefully start moving upwards.
So when is that inflection year when your costs will be taken on board and you will start to reap the benefit of the strong first-year premiums that you are now building?
Lada, typically depends a lot on the balance between ULIPs and traditional products because allowances are different on both. What we are estimating is it will take us between 24 and 36 months to reach a balance and also reach an equal balance between new business and renewal. For example, if the market is such that we see tremendous opportunity for new business growth, then that number may get pushed out. Important to remember that the profit is there. It is just that it shows up in accounting later.
Okay. Particularly on the general insurance business, it's been very strong. X of crop insurance, this time I think you saw a growth recently of 23 to 25%. Going ahead, because there's been a bit of relaxations as far as the regulations are concerned, reduction in claim time, etc. Do you think the general insurance business could pick up further?
I think there is tremendous opportunity in the general insurance business. What we are seeing right now, we're just scratching the surface. As this economy continues to grow, as per capita incomes continue to grow, people will need more and more asset protection. For example, today, very few people buy home insurance. I see this as being the next big line. We are seeing on the liability side, we've just launched a individual cyber security cover. We know what happened with WannaCry, where people had to spend a couple of $100 to unlock their computers in the West. So we are trying a whole bunch of new ideas. Some of them, of course, have their own gestation time. But I believe we will see new and new lines coming up in the general insurance space. So yes, we are very bullish on this.
Most I'm asking you probably a question as an, as a very lay person. Most of you guys are not making underwriting profits, right? You're making kind of other income profit in general insurance.
That's absolutely right, Lata. The industry has burnt too much capital just chasing growth without building a profitable insurance business. And one can argue, so companies could argue that why not just make money on the investment income and burn on insurance. But we think that it is an issue of discipline in underwriting. It's an issue of culture that you build, especially when people like us who are building very large consumer related insurance businesses. And that's why our underwriting profit has been consistent or positive the last so many years, because we will give up business where we can't do that. The only other point I'll add is after listing has now started, we are starting to see companies get a little bit more sensible, but we have to see for how long.
Okay. Sanjiv, I have one more question for Bajaj Finance business, because for years, you walk into Croma or Vijay Sales, obviously Bajaj Finance was the only counter you would see. Now you started to see some aggression from Capital First as well. So is competition sort of intensifying here? Is that going to impact you from here on?
Anuj, I'm surprised that the competition did not come in earlier because there's no rocket science in this, but you need to build very strong foundations to be able to do these instant loans. So none of them can still do instant loans the way that we can, but yes, they've started doing consumer loans. As I had mentioned some time back, our break-even on a consumer loan was earlier a 20,000 rupee loan. We have rejigged our operational processes in the last 18 months, and we are now doing it profitably even for a 5,000 rupee loan. And so there's a continuous effort on our side also to stay ahead of the curve, both in terms of efficiency, in terms of geographical spread. Half of business now comes outside of the top 30-40 cities, where again competition is very low. And I do believe that if we really have to see financial services grow in this country, we need many more banks and NBFCs to come into the consumer space, into the SME space, not just stay safely in the cushions of large corporate lending. And there will be competition. That's part of the game.
But Sanjiv, in the very near term though, can we expect or should we expect higher amount of operating expenses for the company, purely because on one hand, as you said, you're getting into a whole host of new product lines, whether it's loan against property to the salaried class, gold as well you're looking at, and also you have some amount of expansion plans too. Would all of this put a bit of pressure just in the very near term?
I don't see that because the upping up of investments has happened over the last 2 years. So if you actually see our ratios went up a couple of years ago, they will stay there for another year or two as we have a lot of our projects currently in different stages of execution, and then they should start going down. So you will see them there. I don't see a significant additional cost coming in.
Okay, Sanjiv, I'm going to ask you a question we have never asked you before. What is the latest on the Allianz partnership?
Since you never asked me, I never have an answer to give you there, Lata. But more seriously, Allianz stays on as a very committed partner. India is very important to them. This relationship and these two companies, from what we hear from them, are very important to them. And we have their full support. That is where things are. Okay.
And no intent on your part to buy more of stake in the companies?
No, we already have 76%. How much more can we get? And we should recognize the fact also that Allianz is a global brand. They bring in best practices. Of course, there's a lot that we have learned in India itself. So no, we're very happy with the arrangement the way it is right now.
And the other way around, are they impatient to buy more?
That is something that you have to ask them. As far as we know, I think they're very comfortable with the current situation. It doesn't mean that they will not want to take their stake up, but as and when they do, they will approach us at that time. Okay.
Sanjiv, now I wanted to ask you, as an industry insider, typically when interest rate starts rising, it first hits credit companies. Now, I'm not asking you for your experience. You have already seen through credit cycles, and clearly the stock price is saying that you manage it best. But as an industry insider, would you worry that there will be asset liability mismatches? Would you worry that SME loans were given to companies in post-demo and now they are getting into probably getting converted into LAP loans, and someday the cookie will come crumbling? Anything that you would want to red flag investor in NBFC companies?
You know, Lata, what I would say is that the economy goes through cycles. Different segments go through cycles. Even for us, there's no magic in this. The last 2 years, 2.5 years now, our growth in our SME lending has been much lower than in our consumer lending, because we saw greater stress there, whether it was demonetization, effects of GST. And GST, I know, short term is a problem, long term is going to be very good. And we pulled back. We tightened our credit. We started doing additional checks. We started looking at which sub-industries we need to be more wary of. I think any good NBFC or bank has to do that. And that's why, to that extent, if we have to build long-term businesses, you could go through cycles where you have to slow down. We have always said we are first a risk company, and we will always stay true to that. So as long as others do that, I think then that's fine. And this is where managements have to go out, especially for listed companies, and publicly say this. You can't be driven by a particular growth number. There's no magic in that. You have to build good quality businesses.
Okay.
Well, Sanjiv, finally, this universal health insurance scheme that the government has proposed, is there any role for companies like yours, for private, in this?
There could be, and that's why we have to see the details on the scheme. I think it's a very ambitious project, and what is important is to go through the mechanics of it. As you may have read, the General Insurance Council, which represents general insurance companies, have made some suggestions on prices and how this is going to be implemented. It's going to be very important to see that not only the center but the states live up to their commitments as well. Because at the end of the day, when you roll a scheme like this, the person at the front end who is the beneficiary of the scheme, he doesn't, because at the end of the day, when you roll a scheme like this, the person at the front end who is the beneficiary of the scheme, he doesn't understand the fine print. So you need to make sure that you make it very crystal clear. What does he get covered for? What will he not get covered? And as long as there is no fraud, and there's a lot of this fraud that happens on identity, I must say, at the lower end, unfortunately. But as long as there's no fraud, companies should go ahead and pay it. So you have to really create a smooth scheme, and for companies to get back their subsidies from the government, that must happen smoothly as well. Now, so there are a lot of ifs over there, but I think it's a step in the right direction. I hope it will all get put together in an efficient manner.
And finally, will life change for you when these three general insurance companies merge? National Insurance, United, Oriental?
Right now, my life is changing as we're changing our life company. But as far as the three public sector entities are concerned, so you have to keep in mind, you combine inefficiency, you only get greater inefficiency. On the other hand, you combine with strength, you get greater strength. But these things don't worry us because the opportunity is so large. And you've seen with Bajaj Finance, right, in the banking space, public sector banks, private sector banks, we were not the first NBFC or the largest. We have found our space, and we've been partly lucky as well. But I think it's all about finding the right spaces, and India is a huge market. So it doesn't worry us that the fact that the three of them may merge.
Okay, I think that was a line of the moment, Sanjiv. You combine inefficiencies and you just get greater inefficiencies. Thank you so much for joining us and talking about the sector. By the way, just want to get some thoughts in on the market as well, because although the Sensex and Nifty are moving higher, the mid caps are surging now. Just take a look at some of these stocks. Avenue Supermarts is up at a new high today, up another 3% odd. And talking about new highs, names like Cholamandalam, Mipka Labs, all hitting new highs. So a big move coming in.
You know, and normally what happens on the first day of new series, if the previous series is a wash down, is that you see short covering. It's Friday and you made a lot of money and you normally cover shorts. You know, sometimes what happens is that if you have this kind of day on first day of new series, the high of that day actually becomes crucial to watch out for from next series point of view. You see already some of the largest stocks, the FIS stocks, have started to see selling. For example, HDFC, just pull out the intraday chart of HDFC. That's a bit soft right now. HDFC Bank, Axis Bank, they're a bit soft right now. So obviously the rally is being sold by the FIs as well. Mid caps, because they've fallen so much, they will see short covering. That could be the order of the day. But in the large caps, just keep an eye on some of these large financials because some selling is once again.
That's an important point to keep on board.